Hello, this is Dave, and welcome to Equity Story, and welcome. It's Friday, and I've got a really special thing coming up, and that is RC Analyst Live today at 12 o'clock, and I've got Andrew Page with me. So Andrew Page, I think one of the best analysts in Australia over the last 15 years, and obviously really happy to get him on the show. And hear his point of view. Maybe he's not as negative as old Dave, because I'm a bit negative, as you know, at the moment with the markets. Maybe we're going to hear a bit of positivity. That's what we need. Um, but maybe not. Anyway, it's just general share advice and not personal advice. And the Wolf, if any of you have asked, he's still on holiday. He's had been working very hard for like 5, 6 years, and Mr. Wolfie will be back on the 15th, and be very interested to see. God, he really does pick a good time, doesn't he, to go away? He always does this, just as the markets are collapsing. Well, that's timing for you, and he certainly got some good timing, Mr. Wolf. Um, but let's have a look at the markets, and you know what? Trends are often built on these on monthly time scales, and you've seen again. It doesn't look like, obviously, by the end of the day we're going to get back above that 6,700 level. It's not looking very good on the ASX 200, and certainly one would expect even sideways. We're going lower and a lot lower. And if I look at the Dow, let's have a look at the Dow again. Really, this is a sort of market that leads the way. That price action is horrendous, and it would have to do something extraordinary the last day of the month to look a little bit better. So, um, 20,000 I think is looking very realistic at the moment, just the way things are around the world. Possibly, what's that, another 20-25% from here. The market is re-rating, the valuations are re-rating, inflation is crazy. I'll bring this across actually because it's quite interesting. I was looking at in the just talking about um, the inflation we've got at the moment. So okay, here's what it says. This is very good company, TD Securities, betting on higher global rates and sort of giving some ideas where they think rates could be. And they reckon they think the Bank of England um, this year could hike to around 4.25%. The Fed, another 175 basis points to 5%, ECB to 2.5%, New Zealand to 4.5%, and the RBA to 3.6%, and Canada to 4.25%. Um, what they said here is the RBA has also flagged a slowdown in the pace of hikes on the horizon. We'll still look at 50 basis points next week, and maybe they're talking about slowing it down. You know what, RBA, do we believe you what you told us like sort of a year ago that rates were going to stay basically zero for next since till 2004, and now you're telling us another little tiddly that you're going to be slowing down. I don't, when you look at the numbers we had, food up 18%. I don't think they're going to be slowing down anytime soon. I certainly haven't seen any reason, but they're saying that because they're trying not to panic us all, right? But um, but we don't have to be stupid, right? We got to look through what the RBA is saying. We've got to look through a lot of the commentary. I gave the that writer on the Fin Review a little bit of a ticking off where I thought he was underplaying um, those CPI numbers that came out yesterday. But hats off to the Fin Review. They did come out later and they did call it as I think I saw it. And I thought they did an excellent article later. So well done, the Fin Review, because I think it's a great, it's a great. I love the Fin Review. Don't get me wrong. I think it's a fantastic. But and you know what? That's what you've got to remember. It's someone's point of view. Every article you read is just someone's point of view, and but I certainly think it's just dangerous at the moment to play down the situation, and I don't want you at home to start playing it down in your mind, because if you do that, you're going to start putting money in the market when you shouldn't be putting it in, because at the moment, this is still a bloodbath. Now, we've got October coming, and there is a possibility we have a massive crash in October, right? Um, it could happen, right? We could, I think we're going to go down another 20, 25%. There might be over 3, 4, 5 months, but you know what? In some ways, I quite like it if it was just one big month. Suddenly the market realizes, hold on, we got to re-rate everything. Bang, down we go. What could be the catalyst of that? Well, you've seen already, haven't you? The panic with the pension funds that are about to implode in the UK. Um, no one talks about Europe. Europe is so much worse than the UK. That you've got no idea. Well, I mean, my family still live in Spain. You've got no idea what a basket case that is, and the amount of leverage and the derivatives flying around amongst all the banks. There's so many catalysts that could come out and bang, this market re-rates a big time. Um, Honestly, when you look at it, I know there's some exciting little areas, and you can see it today. We'll look at a few stories. You can see some of the lithium stories are still FOMO, and the coal stories are still FOMO, and oil and gas FOMO. But really, apart from a few sections in the market, it's just hard to get excited at the moment. But the other side that we like is dividend plays. Dividend stocks, good dividend stocks, getting sold down in the big washout where we can get great long-term returns on dividends. So um, there's money to be made, and once we do get the big, the big reset and the big market pullback, well, you know what? That's the time where you get embedded for the long term, and that's the time. Hopefully, we can make some really good decisions and get into those long-term stories that you know hopefully could make a little bit of a dent into the mortgage. Anyway, we've got a number of stories that put out announcements today, and I'll go through them. AKE is just IKE. Again, it's good to see companies that are growing their revenue. It's a little bit early for us. We want to see more quarters. It's just a 103 million market cap company. We want to see sort of better technicals before we got into it, or more interest in the story. But it does electrical utilities, and I think at the end of the day, just put it on your watch list. Again, here what we're talking about, the whole let's get back to a weekly chart. We're talking about the still got that, haven't we? That little bit of interest in these sort of lithium plays. And ALY, they won a ballot today, so they basically won the ballot to get a good piece of prospective lithium ground in Australia. So well done them. And you know what? They could trend a little bit higher. So good win for ALY, and absolutely, you can see anything with lithium on it is still doing very, very well. SFR came out today. List production. Are we interested in that? No. Obviously, price action not there. SMR. I thought a good little announcement. It encourages you to hold it. They acquired the remaining 20% of the coal project from Mitsui. So again, well done for them. MEK. Now this is important because we've got a lot of people in this story, and they came out today, and I'll see if I can bring it across with the run rate of exactly what's going on. So sorry, what am I doing here? Where are you, MEK? Just when you want to get the announcement, there we go. I'll bring it over to you, and we can have a look. So there's lots of news coming out, and it's a little gold play that we like the story, but it's got a lot of news coming out, and you can see this is exactly what the Wolf was talking about before he went. I just ignore that. Those are old drill results up here, but very good. At 32 meters, obviously at 16. Essays are pending for 5 RC drill holes and a further 38 AC holes from St. Anne's. They've got a number of stuff coming. Diamond drilling at St. Anne's will commence in early October. Initial mineral resource for St. Anne's to be reported in December. Pre-feasibility study for the Murchison Gold project deferred and will be released in June 2023. So a little bit of not so good news there, that pre-feasibility has been deferred a little bit longer. And diamond drilling commenced at Circle Valley to provide valuable information. So Murchison Gold slightly deferred on their pre-feasibility, but lots of drilling to come over the next 2 or 3 months. So hold tight. There's risk obviously in all these plays, but I think even on that dip, most probably an opportunity to get a little bit more. Um, A1M, and again, none of these are buys, but they're just sort of interesting stories. They came out of announcements today. They had some good copper hits, but are we buying it? No, there's no momentum in the story. Again, another lithium play, WR1, fairly new, Winsome, but you know what? They had some rock chip samples, and you can see it's what's it up? It's up 10%. Really? Okay, rock chip samples, maybe, but they were pretty good. They're pretty good grades. So, yeah, a little bit more interest, and it's maybe you could trend it with a stop loss. But I wouldn't be getting into this just before just at the moment. Maybe wait till before they start drilling. But again, you can see just lithium. Again, it's all about lithium. Um, I wouldn't be buying it. Obviously, not at the moment. Especially if I think October is going to be rocky as, and things could go a little bit lower. I suppose you could take that attitude to a lot of stories at the moment that I'm talking about, but um, I just think not quite good enough yet for me. But one to get on the radar. You know, keep it, put it on your watch list and watch it carefully, and maybe you can make a nice little trend out of it one day. CTM, again, some good nickel results. A good little nickel play this. But again, just going sideways. And again, this is a market. And I get it for the long termers, maybe, but not. We just don't know where this market's going. And if this market crashes, this will go back down to 70 cents. There'll be a better time, a better period in its cycle to buy this story. So, been a great trending story, and we've done very well on it at the moment. It's below trend. We're out. Um, we can talk about another little gold play, GAL. They came up with some superb gold hits not long ago, and of course it's had a fantastic move. I quite like the price action, so it's come back down to trend. It's finding a little bit of support. Let's have a look at it on the daily. Yeah, it's still holding that daily chart. But the interesting thing in this one is that Mark Creasy has been buying up. He's up to 27%. Those of you don't know, he's a well-renowned resource investor, and a lot of people say follow the man, and he's one of those people that a lot of people do follow. He's got a great record in this sort of industry, and again, this is another one interesting little gold play, Galileo. I think this is one well worth putting on your watch list. I just want to talk before we go about Telstra. Uh, they've had, we're talking about this yesterday being, they had a good announcement being an interesting, okay, it's not a great dividend, but I can understand people holding it. They had Morgan's and Morgan Stanley came out today with $4.60 target prices. I was really interested in Morgan Stanley, what they said, because they were talking about the problem that Optus has had. Now, I do Optus Sports, so I was on that list, but I don't care if anyone hacks me. If they can find any money in my accounts, they're welcome to it, right? Because any money I've got, my wife spends it that fast anyway, so I don't really have a problem with it. But I can understand their logic here, because what they said is that they think Optus could lose thousands of customers, and who's going to benefit? Telstra. Well, maybe you're right. Maybe you're right. Personally, myself, would I move? I'm actually with Telstra. I'm a Telstra fan because I hate all those other mobiles when I'm stuck in the country and they don't work. I know Telstra tends to work everywhere. Um, but would I really move? I don't know. I don't think I'd be bothered really. All the paperwork, move my phone, maybe. I don't know. Maybe a few people. I don't know if it'd be thousands, but I could be wrong because I'm not a telephone expert. Okay, and I think that's all I've got to talk about today. Really, it's all fairly quiet. This market is extremely tough, and again, I don't want to be a big bore, but it's just a few stories. That's the only place we're really going to make money, isn't it? Lithium, coal, um, you know, those sort of maybe a few war stocks, but generally speaking, and picking up those great dividend plays when they get sold off. And like I said, I think, you know what? I wish I could just put the clock forward to the end of October, because I might be looking at you very differently, going buy, buy, buy. Or I might be saying something different, saying sorry, I got that totally wrong. But it's because you never know really. But we'll see. Anyway, live at 12 o'clock today with the great Andrew Page. This guy is top notch. He's every time Equity Story, we're looking to get people more intelligent than us and better looking, and he's both those. So please join us at 12 o'clock. Thank you. Bye bye.